Hello everyone, welcome to the Ichimoku.co daily US stock market review for the trading day ending Wednesday, April 23rd. Well, a trading day where we saw the indices coming off. That was the first down day that we've had after 6 consecutive days of gains for equities markets. The Nasdaq 100 was down 32 points, closing at 35.57. That's down 0.9%, and the S&P was only down 4 points. That's 0.2% to close at 18.75. We had early weakness in the larger tech stocks, and also weaker than expected economic figure. We had new home sales coming in at minus 14.5% on March last year, and that was the weakest demand that we've seen for new home sales since the middle of last year. Just looking at the S&P 500, and here we see this black candle after this very strong first time frame uptrend where the market found support down around the 1813 level, closing up above the cloud for a buy signal with Ichimoku, and then closing up above both the Ichimoku Kijun-sen and Tenkan-sen indicators in a bullish manner. For the prior day's trading, we saw the market be rejected from the 1883 level, and it is an important level that the market has been rejected from previously, so there was good potential for a change of trend in this market from here on. No change of trend today, however. Black body candle signifying the sellers finding downside momentum, but the sellers weren't strong enough to take out the previous lows, so that may be significant. But we can see the shadow on the candle from the previous day's trading, highlighting the buyers losing commitment. Today the buyers haven't shown any strength where the sellers have closed with control of this market. If the market does come off, expect some decent support around the 1867 level, 1867.92. We can see here in the recent past that it was an area where we saw the market attempting to breach, but the buyers were rejected from there, so we could see a reversal of roles with that turning into support for the S&P 500. In terms of the Fibonacci extension, we saw the market trading through the 161.8% level previously. We don't have any guide here now. The 261.8%, which is the next target, is up above the major high at 1897, so not too sure whether we will reach that target in this first time frame. But this candle today does suggest that there is good potential for a change of trend. We have a bearish harami type pattern, so we will look for confirmation, and that will be a candle with a lower high and a lower low. Now just moving to the Nasdaq 100, and here we see a very much different market. We've seen the buyers take strong control of this market, a very much larger black body candle suggesting that the sellers have found very, very strong downside momentum, and after the market rallied to within the cloud but found resistance at the 35.92, today we've seen the market turning bearish in that long-term time frame again, and that was expected. The expected rally was destined to peter out and for the sellers to come back into the market. Now importantly, we've also seen the market close beyond the Kijun-sen to the downside, suggesting that we also have a bearish market in the medium term time frame, and looking at the Chica span, that's below the corresponding price action, so it's confirming the negativity that we're seeing in the longer term time frames. Now we also had a window open up from the for yesterday's trading, and today that window has been closed with a fairly bearish candle, and that suggests that there certainly could be more downside in this market. Now more downside could see the market interacting with this important level of previous support and minor resistance around the 35.43 level, so we will be looking to support there. If that fails to hold, we could quickly see the market trading down to around the 3500 level. We should see some solid support coming in there. It's a round number, and we also have the Tenkan-sen trading down around that area. In terms of the Fibonacci extension, and here we see the important 50% level around that 3500 level, or near the Tenkan-sen indicator, so that suggests that if this market does trend down, there should be solid support coming in at that level. And also with the Fibonacci retracement technique, if the market can trade through the 38.2% level at 35.27, then we have the 50% level at 35.05, so even further suggesting that the argument for strong support around that area is quite strong. Now just moving to the sectors, and generally sectors were fairly weak across the board. One of the gainers was the energy sector, that was up 0.19%, and year to date it's up 7.4%, so leading the market to a degree, as we have the utilities leading the market up 9.6% year to date, but up 0.2% yesterday on a generally weak day. So they're sectors that are perhaps defensive sectors, especially the utility sector. But the weaker sectors were in the communication services sector, down 0.1%. Year to date is down 0.52%. And the technology sector was the leading sector to the downside, with it being down 1.11%, and the year-to-date figure for that is up 0.3%, so not a good performance on the year-to-date, and the probably the weakest sector over the year and for today's trading as well. So first let's take a look at the energy sector, and here we saw the breakout above that type of pennant ascending type triangle that we looked at last week. Bullish breakout, and the market has followed through, and if it is a triangle, the market has met a target. Bullish trading, small white body candle, however, so it suggests that even though the buyers are making upside momentum, the amount of momentum in net terms isn't as much as they made after the breakout from the congestion pattern, and suggesting that there is a possibility of a change of trend here. But the market is, the energy sector is trading up above each of the Ichimoku indicators, confirmed by the Chica span, and looking at the relative strength performance against the S&P 500, it is strongly outperforming. The only thing to watch for here is that we have seen a cyclical top in volatility, and volatility is constant and coming off to a degree, so there is potential for this market to either not follow through or to congest or perhaps pull back to the Tenkan-sen. I suggest that the Tenkan-sen, if the market does come off, is the area we should be looking for support, and that coincides with the upper barrier of that congestion area in the recent past. In terms of the weekly chart for the energy sector, and bullish in all three time frames, and here for the previous week we've seen a fairly strongly bullish candle. At the moment, as this candle is developing, it's not as large as that candle, so we need to wait and see how the market finalises trading. But looking at the outperformance, strongly outperforming since the middle of March, so a sector that we probably should be allocating to at the moment. And looking at volatility, the volatility is up above that upper Bollinger Band, suggesting that volatility is strong, and suggesting that we should see follow through and this trend continue to the upside. Next, moving to the utility sector, and here we've seen a change of trend. So after a bit of a sell-off and the market finding support around the Tenkan-sen, the market rallying with making a higher high and a higher low, but a trading day where the buyers failed to close with control. We've actually seen the sellers take control for today's trading, and that suggests that we could see a change of trend back to the downside. Now there is potential for this to form something of a small double top, so completion of that would be a breakout down below the intervening trough here if the trend does change back to the downside. But if that does occur, if we do see the trend change, then we should still be looking to the Tenkan-sen to hold as support for this market, and then certainly the area at the Kijun-sen, which is down around the 300.59 level, should hold as support. Previously this market was outperforming the S&P 500 for some time, but now it is trading within the Bollinger Bands on the relative strength to the S&P 500, and suggesting that we may not see that outperformance continue, and we are seeing volatility tick down. So we have seen a cyclical high in volatility, so it wouldn't surprise to see this market continue to suggest to congest on the daily charts, or even to retrace. In terms of the weekly charts, very strongly performing above the Ichimoku indicator, suggesting a strong market in all three time frames. The market has been outperforming the S&P 500, so the utility sector on a relative strength basis is above that upper Bollinger Band, so we have been outperforming, but the relative strength is moving back toward that Bollinger Band and suggesting that we could see the outperformance diminish. In terms of volatility, we have seen a cyclical low in February, and volatility has been ticking up, and we are getting close to a cyclical high here, so wouldn't surprise to see the market come off. Now, as this current candle is developing, there is potential, if the high remains around this level, for it to form a tweezers top pattern, and if that does form by the end of the week, we will be looking for a lower high and lower low in the market for the utility sector to come off. And at the moment we are seeing a spinning top doji type candle form, and that is a candle of indecision. Now, that market hasn't finished closing yet, so it's important to wait until the market finishes closing before we interpret this final candle at all. Now, moving to the communication services sector, and here we've seen a market that has been solidly underperforming on the daily charts for quite some time, then attempting to outperform up until the middle of April, and then performing around the averages for the last trading week or so. The market has rallied above both the Kijun-sen and Tenkan-sen, giving us a bullish market in the medium and fast term timeframes, but attempting to rally up into the cloud has seen the sellers come back in for today's trading with a close down below the bottom of the cloud, and that suggests that we could see the market continue to lower levels. Now, if that does occur, I suggest that we should see some decent support coming in around the Kijun-sen and the Tenkan-sen, which are trading just below, roughly about one candle length away from the where the market's actually trading at the moment. So over the next day or so, if we do see the sellers continue in the communication services sector on the daily charts, we should see some support coming in. No spectacular trading over the last week or so, trading around average in terms of relative strength to the S&P, but the sector was strongly outperforming the S&P for a fair bit of February and March. Volatility is not really doing anything and is coming off, so it's suggesting that we probably should see an uneventful market in the daily charts. In terms of the weekly charts here, we've seen the communication services sector finding support at the top of the Ichimoku cloud, with the buyers taking control for that week that closed the previous day's trading. But for this week's trading, we've seen rejection from above the Tenkan-sen, and we've seen that for the previous two of the previous three trading weeks that have just closed, and we're seeing that once again, and that suggests that even though there is potential for a change of trend to the upside, the market may still continue to sell off and be rejected from that area. So we will be looking for the market, if it does come off, to find support down around the top of the cloud if that does occur. We are getting conflicting signals with the Chica span that is below the corresponding price action now, so that's suggesting that there has been a change in sentiment in terms of momentum in this market, and it's confirming the negativity that we're seeing in the medium and fast term time frames, but failing to confirm the bullishness in the longer term time frame, and suggesting that there is a possibility of this market trading lower. Now, in terms of relative strength, this sector has been underperforming the S&P for quite some time. A small area of outperformance here for just half a week or so, but underperforming since January on a daily basis, and still under that bottom Bollinger Band. Looking at volatility, volatility has ticked up from a cyclical low, but it has flattened out, so we are seeing some congestion at the moment. But there is a possibility of volatility continuing to the upside, and if we see that, we're likely to see trending action in either direction, and that would be a breakout either up above the Kijun-sen indicator or down towards the cloud and even within the cloud. In terms of the technology sector on a daily chart, and here we've seen a change of trend for today's trading. Previously we saw the market rallying with the buyers in control for most of these candles for the past week or so. Very small body candles, so not terribly strong candles, and today a change of trend where the market found resistance within the cloud, and we've closed back outside of cloud on a strongly bearish candle with the sellers in control. There is a strong possibility of the area at the Tenkan-sen around the 25.53 level holding a support. That area has held a support for two of the past four candles, so it will be an important area if this market does continue to sell off. In terms of the Chica span, that's below the corresponding price action, so it's confirming the negativity that we're seeing in the long-term and medium-term timeframes, and suggesting there is a very real possibility of this market testing to the Tenkan-sen or even beyond. In terms of relative strength to the S&P 500, the technology sector has been strongly underperforming for some time, for a fair bit of March into the end of April that we're seeing at the moment, and certainly doesn't look as though there will be any let up. The one thing to watch here for, however, is that volatility is coming off, so there is a possibility of seeing some congestion and perhaps some support around the Tenkan-sen, the green line here. In terms of the weekly chart, however, and here we see a bullish market in the long term and the medium term timeframes, the market is trading a fair way up above the clouds, so looking a little overextended, and the Chica span is above the corresponding price action, so that's confirming the bullishness that we're seeing in that longer term time frame, and we are just bullish in the medium term time frame by trading above the Kijun-sen. At the moment, we are seeing the Tenkan-sen hold as resistance, as it did 2 weeks ago, and whereas the market was previously trading up above that Tenkan-sen and it was holding as support, now it's holding as resistance. So it is suggesting that there may have been something of a shift in sentiment in that fast-term time frame, and suggesting there is a possibility of the market coming off and trading to lower levels. In terms of relative strength, we are now seeing the market underperforming the S&P 500 on a weekly basis, whereas the technology sector was previously outperforming at the end of last year, and then at the end of December into early March, we've now seen that indicator under the bottom Bollinger Band, and suggesting that there has been strength in the underperformance. Now, looking at the volatility is near a cyclical low, so that suggests that volatility may begin to tick up again, and if we do see price action rejected from the Tenkan-sen and down below the Kijun-sen, it suggests that we could see volatility come into the price action, and that trend to the downside perform quite strongly. We could, however, see volatility come into an upside move. So it really depends on how the market reacts to the resistance at the Tenkan-sen and the potential support around the Kijun-sen at the moment. So we do need to be patient and wait for resolution of price action outside of these areas of support or resistance on the weekly charts. Now, in terms of stocks that we're looking at in each of these sectors at the moment, Halliburton has been a good performer. That's HAL, closing at 64.72, up 2.11% today. In the utility sector, we've seen Public Service Enterprise Group, PEG, closing at 39.39, up 0.41%. Verizon has been a laggard in the market in that communications sector, closing at 47.43, down 1.02%, and Google in the technology sector, GOOG, closing at 526.94, down almost 1.5%, has been a laggard. And firstly, to Halliburton, strongly performing here, a bullish trend to the upside today, with the buyers maintaining control that they had for the previous day's trading, maintaining the net momentum that they found for the previous day's trading, and bullish in all three timeframes by trading above each of the Ichimoku indicators. Strong outperformance since the middle of March here by trading up above that upper Bollinger Band, outperforming the S&P 500, and we see volatility quite strong in trading up above that Bollinger Band, and certainly moving up towards an all-time high, and suggesting that there is further upside or potential for further upside on Halliburton on the weekly charts. And the daily chart is looking very, very similar, bullish in all three timeframes, strong outperformance, and looking as though volatility has further to go, and providing further support to the trend to the upside. Looking at PEG, and here we see a change of trend today, and a candle that's made a higher high and a higher low, but a trading day where the sellers have failed to take control. Now, as we've seen with the sector chart, the Tenkan Sen here becomes very, very important. This market is bullish in all three timeframes, but at a very important juncture here with the Tenkan Sen close by and providing support. If we see a bearish close down below there, we could quickly see PEG trading down towards the Kijun Sen, which is around the 37.90 level. But the trend is up, and we would require confirmation of that change of trend. Looking at the performance, however, on the daily chart here, and PEG hasn't been outperforming the overall market for the past few trading days, and that's at odds with what we've seen since late March, and suggesting that there may have been something of a change of sentiment in this market. And I suggest that if we do see price action down below that Tenkan Sen, we could see that underperformance moving down below the moving average on the relative strength. Looking at the volatility is coming off, so suggesting that we are perhaps going to see some congestion around here, and we may not see the trend to the upside continue. On the weekly chart, a strong market in all three time frames, but a spinning top type candle may be forming here at the moment, a potential tweezers top, so very similar to what we've seen in the overall sector chart. And looking at the performance, it has been strong since the breakout up above the Ichimoku cloud, and suggesting that it was a stock that was a good trading stock. And the volatility has been ticking up, and volatility is at a very high level, at a cyclical high very soon, suggesting that we haven't seen a high as this for quite some time, and we may see price action come off, and that would be in line with the market potentially forming that tweezers top. But this candle hasn't finished trading on the weekly chart, so if it does finish trading in a similar way to this, then we could see the market coming off and firstly finding support down around the Tenkan Sen at 37.50. Next, moving to Verizon in the communication services sector, and here we've seen quite some indecisive trading around the Ichimoku cloud. Previously, the market was trading down below the Ichimoku cloud, giving us a bearish market, then a breakout, false breakout, not any decent follow through, then trading down below the cloud and now above, and testing down to the bottom of the cloud on an indecisive candle that has initiated a new first time frame downtrend. So we could see some strong support coming in around this area, and the swing low here from the previous trough around 46.72 may provide that support. No spectacular trading activity in terms of relative strength, and volatility is at a cyclical low, so suggesting that if we do see some decent follow through with the breakout either below the swing low or the swing high around the 48.45 level, we could see some decent trending action develop because of the cyclical low in volatility that we're seeing. In terms of the weekly chart, really the strong resistance overhead is that we're seeing on the daily chart is supported by the market trading just below the Kijun Sen indicator and finding resistance there, but then also finding support within the cloud around the bottom of the Ichimoku cloud. So a market that's very indecisive in that longer term time frame, and just slightly bearish in the medium term, and just bullish in the fast term time frame by trading above the Tenkan Sen. Fairly strongly underperforming the overall market for quite some time, and certainly not a market that it would want to be added to a portfolio of long stocks in that longer term time frame. We are, however, moving to a cyclical low in volatility, so it wouldn't surprise to see volatility tick up, and that would perhaps coincide with a breakout above the cloud or below the bottom of the cloud, and good confirmation of a price action in either direction would be either a bullish breakout above the cloud or a bearish breakout down below. Next, moving to Google, and here on the daily charts, not a good looking market. Bearish breakout below the Ichimoku cloud, an important rally to the cloud and to the Kijun-sen and Tenkan-sen, and then selling off, with the market now tending to find support either at the Tenkan-sen or in the area between the Tenkan-sen and the Kijun-sen. For today's trading, the sellers have taken control. They have changed the trend to the downside, where there was a change of trend to the upside for the previous day's trading, and this suggests the possibility of market trading to lower levels. But we do have some strong minor support around this area, around the 525 level, so we could see buyers coming in. Better support down around the 519 level. But looking at the underperformance here, very strongly underperforming the overall market, the S&P 500, and suggesting that there is a likelihood of this underperformance to continue on the daily charts. In terms of the weekly charts, and now a bearish market in the medium term and fast term time frames, by trading down below the Ichimoku, Kijun-sen and Tenkan-sen, the Chikou span is just above the corresponding price action, so suggesting that there is still upside momentum in this market, but only just, and suggesting that there is good potential for the sentiment to change in terms of momentum and in terms of those that longer term time frame. The market is trading a fair way above the Ichimoku cloud, with a bullish market in that longer term time frame, but certainly with this market underperforming the overall market, the S&P, over the last month or so, it certainly isn't a stock that one would want to be long in. Previously outperforming the market up until early March, and now underperforming, so it's probably some good solid profit taking place at the moment. So this week's trading, it is some important trading coming up at the moment. We have the market trending down previously on a doji type candle, a candle of indecision. We would have expected perhaps some buying to come in, but now as this candle has developed, we've seen weakness in the market. And I suggest that even if this market does rally, we should see strong resistance around the Kijun-sen, roughly around the 559, 560 level. Important will be the low of the previous candle at 518 of that doji candle. It may provide some support, but if we do see strong bearish activity down below there, we could quickly see this stock Google trading to lower levels.